Let's talk about a puzzle at the heart of modern auto and commercial vehicle lending. You see, banks are pouring tons of money into their systems, but the results, they're just not matching up with the investment. So what's really going on here? To be blunt, something's broken. Despite all the heavy investment in these big loan origination systems, these LOS platforms, the key numbers, the things that actually matter, are all heading in the wrong direction.
And this is the question everyone's asking, right? You've got this shiny, new, state-of-the-art platform, so why on earth are your conversions falling? Why are turnaround times getting longer and your credit team's completely burning out? It just doesn't add up.
Okay, this is where we need to reframe the whole issue. We tend to focus all our energy on the application and sanction stages, but check this out. Most lending platforms only really wake up and start working at the application stage. That is way too late in the game.
So here's the big light bulb moment. The problem isn't the final decision. The real failure point, the place where everything starts to go wrong, is right at the very beginning, at that first point of contact with a potential borrower.
And this really gets to the root of it. Your credit policy itself, it's probably fine. The failure happens because that policy has to be interpreted manually, by a person, case by case. And that leads to inconsistency and errors.
I mean, let's be practical. Your underwriters are busy people. They're not sitting there studying a 50-page policy PDF for every single case. No way. They're looking for key indicators, a few specific data points that tell them if a deal is good or if it's bad. There's a huge gap between the static document and the dynamic real-world decision.
And this is where the solution comes in. We call it lending intelligence. You can think of it as a system designed specifically to bridge that exact gap. It takes your static credit policy and turns it into automated, consistent, and, this is key, fully explainable decisions at scale.
And it works in 3 pretty simple steps. It takes your policy, it intelligently pulls out the key indicators your best underwriters are already looking for, and then it transforms them into executable decisions that you can apply instantly.
Now this is absolutely crucial. Auto and commercial vehicle lending isn't generic. It's a different beast. It requires deep product intelligence. A one-size-fits-all workflow just can't handle the unique risks and all the little nuances of these kinds of assets.
You know, for example, with used cars, a ton of the risk shows up after delivery. Stuff like registration delays and ownership gaps. For commercial vehicles, it's all about operational credit, how the fleet is actually behaving, what their true cash flows are. Generic systems are completely blind to all of this.
So how does all this actually build into real success? Well, it starts at what we call the first mile. It's all about using those key indicators to create smart quality gates right at the point of first contact. This ensures only the viable, solid applications ever even get to underwriting in the first place.
So here's the fundamental shift in thinking. Traditional LOS systems are built to do one thing: move files from one desk to another. They move digital paperwork. Lending intelligence is built to do something totally different. It moves outcomes. It's focused on results, not just on process.
And this isn't just some theory or a future concept. It's the new standard. It's about building a smarter, more effective system from the ground up. Honestly, this is how modern, successful auto and commercial vehicle lending is being built today.